Video, we'll be going over IRS notice CP523. This is a notice of intent to levy and an intent to terminate your installment agreement. So let's go ahead and take a look at the top right corner of this IRS notice. We'll take a look at this and then we'll go from there. So at the very top, you see the notice number CP523. Looking this up, this basically means that your notice of intent to levy followed by your intent to terminate an installment agreement basically means you're pretty close to the end of the collections process when the IRS is going to start actually seizing property from you. So this is definitely a notice that you should pay attention to, even though there probably have been previous notices in the past. If this is the first time you have seen an IRS notice, then we can follow some steps pointed out later on in the process. So this is for the tax period 2017. This is the notice date is January 30th. I always advise people to take note of the notice date. And the reason why is because if there's a requested action, then the IRS usually makes the due date of that action item within 30 days of the notice date, within 45 days of the notice date, so on and so forth. So for example, we see right here, if you don't make the required payments, we will terminate your installment agreement 30 days from the date of this notice. So pay attention to this notice date. You'll see the taxpayer ID number, a contact phone number, and then a caller ID, which you can use to identify yourself if this happens to be the IRS standard 800 number. And then over here should be your name and address. So in this case, this is a business name with an address. The second thing I always advise people to do is to make sure that your address is up to date with the Internal Revenue Service. So if you're in the middle of tax season and you file your tax return, that's the easiest way to update your address information. Because every year when you file your tax return, if you use a different address, your IRS record gets updated with the new address. However, if you're receiving correspondence, or if you might receive correspondence throughout the tax year, then it is in your best interest to receive that notification as soon as possible, instead of having it bounce around the postal system trying to catch up to your new address. So if it's like May or June, and you've recently relocated, you should either call the IRS, validate your taxpayer information, and you can change your address over the phone, or you can file a form with the IRS Form 8822 for individual taxpayers, IRS Form 8822-B for business owners, and that's the official change of address form for the IRS. So I would recommend that you do that, just so that you can stay on top of your notices and get them as soon as possible. Because especially when you're this far along in the collections process, your options to appeal, to address issues, to point out things that you disagree with, your options are becoming more and more limited. So the best way to keep your options open is to make sure that you're receiving your correspondence in a timely manner. Keep your address up to date. With that said, by the way, any forms or topics that we mention, we'll put links in the show notes for articles and videos that we've created that touch upon some of these forms that are mentioned. So if you hear about a form and you want to know more about it, you can find the links in the show notes. So the first thing that I'll tackle is the notice of intent to levy. So I usually point this out as opposed to the notice of a federal tax lien. The difference between a lien and a levy, as far as the IRS is concerned, is that a lien basically means that the IRS attaches to a piece of property a document that basically says you owe taxes. So if you make your payments, if you try to pay down your tax debt either in full or by creating an installment agreement, then the lien doesn't do anything other than just state to creditors that the IRS still has an interest in your property until your lien is paid off. It's nothing more harmful than a mortgage, although it may hurt your credit if you try to apply for additional credit, if you try to refinance your house. That may be a lot tougher with a tax lien in place. However, you're not going to get your property seized just because there's a lien on it. However, if the IRS does not receive any payments, if you fail to set up an installment agreement, if you don't respond at all, then the IRS continues down the collections process, and eventually we arrive at the intent to levy. So the written notice of intent to levy is a notice that's given right before you're going to start seeing assets seized. It could be a home. However, the IRS usually is going to try to go after more liquid ways to pay your taxes. So financial accounts, tax refunds, that could include a state tax return, Social Security payments. The IRS is not going to sell your house out from under you if you have money in a bank account that they can go after. The IRS is not in the real estate business, nor do they want to be. They simply want their taxes paid. So they're going to go after the easiest way possible. So that's the difference between the lien and the levy. The levy means you're in a really dangerous situation where the IRS will start seizing property to pay your taxes down. So in this case, we do see that, hey, we're going to terminate your installment agreement in 30 days if you do not pay the required payment. And it turns out that your total amount due up front if your installment agreement is terminated is $10,803.20. That includes this $9,444.07 of taxes that you owe, plus a failure to pay penalty of $34.98, plus interest charges of $1,324.15. Now, if you just want to prevent your installment agreement from defaulting, then you can avoid the levy process for now, and you would need to pay $300 within that 30-day time frame. So again, this notice of intent to levy only applies if your installment agreement is terminated and if you've exhausted your right to appeal that termination. Then the IRS will come after you for everything at once. So if you have $300 in this situation, it would be best to at least pay that amount and kind of, give yourself a little bit more flexibility to handle things down the road. So if you want to make that payment, you can make a check, or you can pay online through the IRS website. You can also use this payment voucher where you would write out a check or a money order to the U.S. Treasury. You would write your taxpayer ID number, the tax year, and the form number on your payment. And then you would, fill in the amount that you're paying. You would send that to this IRS address in Austin, Texas. So we'll go through the rest of this. There are 10 pages on this, but I don't think there's 10 pages of information. So intent to levy. In this case, the IRS is saying that they may seize your state income tax refund or other property or rights to property, and then apply that. So it doesn't exactly say what they're going to do right now. It just says we may seize your tax refund and then there's kind of a catch-all with other property or rights to property. So immediately what you would need to do is make that payment. You can call the 800 number if you need assistance, but you will need to call the 800 number if you either need assistance, if you have a disagreement, or if you agree but you just can't pay the past due amount. Then the IRS may ask you to provide them with an updated financial statement. That would be the IRS Form 433F, also known as a collection information statement. So they can possibly restructure your installment agreement. You may pay an additional user fee of between $43 and $89, depending on whether or not you are a low income taxpayer. There is a form that you can complete based on low income taxpayers. We'll put a link in the show notes. The form number escapes me at the moment, but we'll put a link in the show notes to an article and a video that kind of goes through how the IRS defines low income taxpayers, what the qualification criteria is, so that you can navigate that and determine whether or not you would qualify for the lower fee. You can appeal this by either calling the 800 number, or you can send a collection appeals request, which is IRS Form 9423. You would send that to the address at the top of your notice. There's another payment voucher in case you lost the one on the first page. Not a lot of information on that page. This is a little bit more information on what's covered under an intent to levy notice. The types of property that they can seize, what the IRS can. You can go through what's known as a collection due process hearing. So if the IRS has previously sent you a notice about a collection due process, you can appeal that, or you can request a collection due process hearing, which is similar to the collection appeal process, slightly different based on the criteria in which you would request that due process hearing. And that's more along the lines of you disagree with the taxes that you owed, you're a little bit further along in the process. And one of the primary differences is that with the CDP notice, if you file it in a timely manner and the Office of Appeals does not agree with you, you can appeal that decision to a tax court, the U.S. tax court. Whereas with the CAP, the collection appeal the collection appeal, you cannot do that. So yeah, the collection appeals program. So there's a tax form. We'll put a link in the show notes on how to request the CDP hearing. There's a little bit of language here about how the federal government passed a law in 2015 requiring the IRS to notice the State Department of taxpayers that have seriously delinquent tax debt. And seriously delinquent tax debt is defined as an unpaid, legally enforceable tax debt, federal, totaling more than $52,000, for which a notice of a federal tax lien has been filed and all administrative remedies have been lapsed or exhausted, or if there's a levy that's been issued. So the IRS may notify the State Department. If that happens, the State Department generally would not issue a passport. They would not renew a passport. And if you have a passport, the State Department may revoke your passport. So, that basically is trying to kind of prevent people from just skirting out of the country simply because they owe a lot of money to the IRS. So there's some language about payment options. You can request an offer in compromise, which might allow you to settle your tax debt for less than the full amount that you owe. So you can go to the IRS website and see whether or not you might be able to make an offer in compromise. And then if you don't do anything, if you don't respond, the IRS is just going to keep on going through the collections process. So the failure to pay penalty, this is $34.98. There's some language here about how the IRS imposes a monthly penalty for not paying taxes. You can request to have penalties reduced or removed. And you can do so by filing a claim for refund and a request for abatement on IRS Form 843. Interest charges. So this is interest that is on both the tax debt and any penalties. This is a breakdown of the interest rate by quarter. And this is the total interest calculated. If for some reason you had a penalty abated and there is interest that was accrued on that penalty, then the IRS would remove that interest that was on the penalty. However, in this case study, there's $35 of penalties and $1,300 of total interest. So even abating that $35 penalty probably would not move the needle much in this total interest column. This is the second to last page where it talks about additional information and resources on the IRS website. The Taxpayer Advocate Service is an independent organization that can help you. You can visit the Taxpayer Advocate website. You can call the 800 number. There's also a tax form that you can file, IRS Form 911, I believe, that you can request taxpayer assistance. We'll put a link in the show notes to that. And then low-income taxpayer clinics. Again, the IRS has a definition of who would qualify as a low-income taxpayer. So we're going to take one quick look at the IRS page that specifically discusses this notice, because I'd like to see if there's anything new here. So basically it goes over what you need to do. There's some frequently asked questions. There's a link to a passport certification page on the IRS website where you can learn more about how the IRS reports your tax debt to the State Department. But not a whole lot here that we haven't already gone over, so we'll go back to this notice and we'll wrap it up. So bottom line, if you receive a CP523 notice or any notice that says notice of intent to levy and intent to terminate your installment agreement, that means you should take immediate action to, at the very least, call the IRS, make that minimum payment, do something, because otherwise you're going to start seeing money disappear from your bank account, or you're going to start seeing checks being garnished, whether it's Social Security, refunds, whatever it is that you think you may have a right to, the IRS is going to start dipping into that. So it is in your best interest to at least get the IRS to push pause on the collections process while you're getting your act together. So as I mentioned, we'll put links in the show notes to the articles and videos that might be beneficial for you if you're in this situation. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's another topic that you'd like to see a video for, please hit me up in the comments section. Thank you very much and have a great day.